Morning, you are looking at the homepage of WSJ.com. What do you see up there at the top? MF Global trustee may sue Corzine. The trustee in the MF Global case, the bankruptcy case, out with a new report this morning. This story just hitting the website a little while ago. The trustee blasting MF Global management, and as you can see from the headline, talking about suing John Corzine, the former CEO. Good morning, everyone. Welcome to the Markets Hub. I am Paul Vini. To help us with this story and all the MF Global news, Julie Steinberg's with us this morning. Julie,
morning.
Let's talk about this story that you guys just got a little while ago, right?
Just got an hour ago. 275-page, very comprehensive report of everything that the trustee has been doing over the past 7 months since MF Global failed to see what actually happened there.
I can't believe it's 7 months
7
already.
months, right?
That is outrageous. And what were his main findings? I mean, obviously just blasted management, right?
Completely. We're getting closer. I mean, still there's no smoking gun. There's no individual saying you need to, we took customer money, you have to do that, that you made the order, and that's how this, customers lost billions of dollars. That we don't have that. What we do have is basically the trustee saying we're going to possibly take action against 3 individuals. Corzine, the CFO, the Chief Financial Officer, Henry Steenkamp, as well as Edith O'Brien, who was the Assistant Treasurer in the Chicago office. Now, he may sue them if he finds it suitable. Unintended? Not intended? Just go with
Unintended,
it. Yeah. He may sue them for breach of fiduciary duty as well as negligence, because what he found is that they presided over hundreds of millions of dollars being borrowed from customer money to fund what was happening on the other side of the business, to fill margin calls, that sort of thing, which we've talked about in our previous articles, so that's not really a surprise. What is a surprise is basically the amount of detail they have. And this is going to be reassuring to customers, I think, because we're getting closer to what really happened.
Now, it's obvious that something wrong happened here, right? The customer money disappeared, wasn't supposed to. I know that you say there's no smoking gun, but I mean, it's obvious that something wrong happened here. How is it possible that they can't put the pieces they have together? I get it, you don't have an email from John Corzine saying raid the customer accounts. Do you really need that to have a case, though?
Well, here's what happened that we just found out about this morning, actually. In the summer of 2011, they began a new strategy saying that you could borrow from the other side of the business to fund the proprietary trading part of the business, which was new. They needed liquidity. So they said, okay, you can start borrowing from the FCM side of the business, which was all the customer accounts, but you're not supposed to use customer money for that. Somehow, in that final week, when things were so crazy, lots of chaos in the back office, people were swamped. They weren't using, if you can imagine, Paul, they weren't actually using digital processing for this. They were doing it by hand. They were keeping track of all their loans by hand, and just a combination of human error as well as just ignorance of what was going on led to this accumulation of 1.6 billion. It's pretty remarkable that in the day and age of technology where you're supposed to have instantaneous knowledge of what's happening, you're still relying on Microsoft.
Well, you'd think too. I mean, by hand it should be even easier. Let's talk about the other story, the other MF Global story today, right? Because you guys have another story on MF Global talking about how the federal investigators are looking at the same thing we were just talking about, right?
Definitely. Everybody, so obviously there are huge amounts of people.
You see there on the money invest, it's at the top of money investing today.
Yep.
Feds examine the false that word, false promise. Let's talk about that. What was the false promise?
The false promise was the number sent the CME on Friday. And
Chicago Mercantile Exchange,
of course,
which regulated them.
Exactly. Yeah. And they were their overseers, essentially. And MF Global sent them a note on Friday saying, we have plus $200 million in this excess segregated funds. We have a surplus as of Thursday, October 27th. That wasn't the case. They actually had a deficit. And at that point, CME thought everything was fine on Friday, but actually they were in the red by a few hundred million.
And that deficit was growing at almost an exponential rate in front of the bankruptcy.
Exactly. By Sunday night, it had accumulated to $952 million. That's what they came up with. Whereas on Friday, they had thought everything was fine. But what we found out in our reporting is that there was one accountant who aired his concerns and basically went to Treasury and said, listen, we've got a problem here. I don't have all of my bank reconciliation statements, which showed, all the money coming in, money going out. I don't have, it's not all matching up. We're seeing a deficit here of a couple $100 million. They go through the bank reconciliation statements with Treasury. Everything seems to be fine. They come up with a few items that say, no, you're good. You're in the black. But turned out that wasn't the case at all.
They were not. All right. We may not find that smoking gun, but clearly something wrong was going on there.
Definitely some smoke.
Somebody has to answer for it. Julie Steinberg trying to get to the bottom of that one. Thanks for your time.
Thank you.